Guys, so I want to talk about foreclosures. Your neighbor's probably talking about it. There's going to be a crash in the market. You got a real estate agent that probably does one deal a year telling you about it. And you know, your uncle or brother, whoever else it is, falls, put the brakes on it, okay? The number of people in forbearances fell from 2 million to 1.75 million in the last couple weeks. 25% of those people kept paying their payments. They were in forbearance to have as a safety net in case something happened at their job and then they couldn't pay. Now, the other people, the large majority of those and almost all of those, what's going on is the bank says, oh, you owe us $10,000 for the last 6 months you didn't pay. Now, if you owe $300,000 on your mortgage, you owe us $310,000. That means at the end of the loan, they're going to have to pay that $10,000 balloon in most cases. That is what we are seeing. And then what are the clients going to do? Well, rates are lower. They're going to refi or they're going to sell. And that's going to happen a lot more now that we're getting some more less doom and gloom in the news, which they'll probably try to do it again to us anyways. But that's going to happen, okay? Or they're going to refi. This isn't the past. This isn't what's going to happen where we're going to have a ton of foreclosures and the market's going to crash. It's not going to crash, folks. What this is we have a supply versus demand issue. Even David Ramsey said that as well, okay? The mortgages that we're handing out, borrowers actually have to be qualified for those. And if we have foreclosures, it's actually going to help the market, okay? Believe it or not, but we're not going to have a lot of those. People have tons of equity. They will sell their house. And with the supply versus demand issue, the value is going to keep going up over the next year. Okay, you're going to see values go up until probably towards the end of next year in 2023, and they'll still continue to go up because that's when the Fed's going to start raising rates and quit tapering on keeping them low by buying mortgage-backed securities. But they're going to do that at a gradual amount, which means values will start not rising so fast and eventually will plateau and then get to where they'll go up gradually and probably to a regular market sooner or later, okay? There is going to be a lot of confusion here with this because the news is going to talk about it, your neighbors are, but we're not going to have foreclosures like that, guys. This isn't going to be a crash, okay? So for you buyers out there, get your head out of the sand because you're going to end up paying a whole lot more for a house if you think this is going to change. And even when it does change, your home that you want to buy right now is going to be 20% more. What does that mean? A home is $300,000 and a year from now will be $360,000. You know what that means to your payment? Do you know what that means by your out of pocket for down payment? Get off the fence, get out there and understand that real estate, it may suck buying a house right now, but in the long term it's going to pay off. That's how everything works in life. To get to a certain point, it may suck right now, but it'll pay off in the end. Have a good day.